Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, November 19, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, there's a number of things we want to discuss today, and there's a few outliers as well, such as we're going to talk about Tesla, and we're going to put forth a target on the upside for Tesla. Did some work. I think I have a clue where Tesla's going on the upside. We're going to see what happens. We're going to put a target on the board. We're going to take a look at the chart of some of the Fab 7 to see what's going on. Are they doing something different than the overall market indices might want to dictate? Is anything foretelling of stuff coming? We're going to take a look at some stuff from the lazy swing trader automagical algo system. We're going to talk numbers in the Spider. In fact, we're going to start right there, right now. They're still, in a sense, building a bearish, flaggish kind of situation after the move lower into the 20-period moving average. However, there's always a however, but wait, there's more. So you see this high of this breakdown candle here is 590.20. Today's closing print was exactly 590.30, 10 cents above. There are no accidents or coincidences in the market. In fact, might want to write this one down. High of day was 591.04. Again, no accidents or coincidences. We'll come back to that one in a moment. What we're saying here is the door is open unless they do a rug pull and a fake out operation. The door is open for another leg higher to go fill this gap that was left open. That was on Thursday. And also while they're up there, they'll be running a test from underneath or from below of that upsloping trend line that we left on the board for a reason. That's what it looks like across from the gap. So they would have to spike the gap to get up to the trend line. Nonetheless, that is the next objective for Mrs. Market. Might want to write that down, put it on a sticky note if she's going to stay in a bullish formation above this breakdown candle high at 590.20. How you doing? Here's a little hint for you intraday traders tomorrow. Below 588 won't be good for the bull case. Intraday, if they're closing candles, obviously everything morphs from a shorter time frame to larger time frames. So they close 5-minute, 10-minute, 15-minute, 30-minute, hourly candles below 588, and they're likely trading lower and or just continuing with this bearish, flaggish type of situation above 590.20, and she's in bullish mode, likely rising higher. Thing got active again after the election, so the board is filling in. We've got shorts, we've got longs. We had a short and a long hit profit target today, and we had a long hit profit target yesterday in JD.com. Here's one of the other ones, FCX Freeport Mac. We were entered at 42.66. That's where the alert went out. It was on the watch list. First profit target, just to get a base hit in our pocket, was today just around 44 bucks. And there's a big reason why, because you're not 100% sure they're going to get through that. They could just be running a test of that. So I want to make sure we book some profit there, and we have trailing positions. And what happens is we get the secondary push, F, capital I, capital F. We get the secondary push. We get more profit out of the same trade. We turn them into risk-free, emotionless trades. Here's another one. This one is Lowe's Companies, LOW. This was a short trade alert at 275.69. It is now a risk-free, emotionless trade. Profit was taken right here today around 263, around the opening bell. Now it's risk-free. This was first profit target and represented about 6% gain in just a matter of days. Lazy swing trader, automagical algo system. Now we switch over from swing trading to intraday trading inside the numbers. What we do here is provide intraday commentary starting at 0 dark 30 in the morning. like 6 or 6:30 most days. This is intraday commentary on the S&P 500 using the SPY. We normally have some stocks on the move. We didn't have any today. It was what we call a fake sell-off with no stocks on the move or nothing with the characteristics we're looking for to make the list. So we had a blank list today. Then we have a whole list of indices and other exchange-traded products that we provide inside the numbers each and every day. There's a dozen markets here, including Bitcoin, the dollar, natural gas, silver, oil, crude, GDX, TLT, SMH, spiders, of course, QQQ. Pause the video. Check out the numbers. Go back to the chart. Just double check the work. So we had a typical turnaround Tuesday on our hands. We're starting with the early pivot, 586.80. Above, she's bullish. Below, she's not. Then the thieves in the morning showed up and started melting down the market. So closer to 9 o'clock, we have a real turnaround Tuesday. So what's the scoop? We have 582.60 or a spike is the next place down south. 582.60. Pay attention to this stuff now. Support number 1, 582.60. Remember, this is on the list published at 0 dark 30. 5-minute chart, right of the vertical is today's activity. 582.60 is the number that was not hit during the regular session. However, you go to the extended hours, and what do you have? All of a sudden, you have a market that, when was this? At 9 o'clock. I got it on the board as soon as I could. Actually, it hit before that. The number was on the board early. 582.60 was the place. And in fact, it was the place that I was looking for from a regular session perspective. But wait, there's more. And we have a new pivot, which is 585.40. So let's put that on the board. This is all before the opening bell. Interesting. Above the pivot, she's bullish. And below the pivot, she's not. And as you can see, once she established price over the pivot, she took off to the upside, filled the gap left open last night, and then some. 9:15, the pre-market thieves bounced at the 582.60. 585.40 is the new pivot, or the pivot, give or take, is overhead resistance. 584.10 shows up. 584.10 above, she's open for the pivot. Below, she's open for 582.60. 584.10 on the board before the opening bell. How you doing? 584.10. Now, truth be told, in the live room, I was looking for lower. I was looking for around the pre-market lows. I was looking for 582.60. But we did have some traders that took 584.10. And if you were just an inside the number member without the live room, you would have never known that I was looking for lower anyway. And that was the number that you saw on the board before the open. So a lot of those folks took the trade. Pause the video. Read the notes. Go back to the chart to double check the work. I just want to point out a few important things to show you that if you're an intraday trader trading in the S&P, a derivative of the S&P, the SPY, options on the SPY, the micro contracts, the ES contracts, the MES, the exchange traded products, it doesn't matter. These are all directional trades, and these numbers work no matter what vehicle you're trading. But wait, there's more. Remember the 590.20? If above, where are they off to? It's off to run a test of 591.05. Not 591, not 590.95, 591.05. And we'll certainly issue this one a funny how that works. The high in this candle is 591.04, and the high in this candle is 591.04. There are no accidents or coincidences. They came up 1 penny short and sold away. That was off to run a test of 591.05. I think that counts. Again, we'll give it a funny how that works. Did you check that list? Look at natural gas, 289. That's support number 1, resistance number 1, 304. 304, market sold off from resistance number 1, natural gas. There's more. You got to go through it. If you're willing to do the work, you're serious, if you're willing to find out how those numbers are, if they're right, how many of them are right, could you make money using those numbers? If you're serious, then you'll go and find out for yourself and check out the numbers, go back to the chart to double check the work. I did one of them for you, natural gas. Before I talked about Tesla, I said I was going to give you a target in Tesla where I think they're going. And obviously the gateway is now the recent high. They got to get above and stay above the recent high to get here. What's that number? 381.60 in Tesla. That's where I think the target is in Tesla. I've done the math. I've done the homework. We'll watch it and see what happens. Let's see if they can get freed to go higher as long as they can get above and stay above 358.64. Tesla. We were discussing this one in the live room today. Camp IWM. Anybody think that's a reversal? Why is that black line there? You have the 20-period moving average in the most recent breakout area. Funny how that works. On-time situation, former breakout area, 20-period moving average. It's called a full stack situation. It's got to hold now for the bull case. You got to see follow through. It's got to hold above the most recent breakout area. Giving up today's low would not be good for the bull case. It would be good for the bear case. It would be bearish. What about the folks down at the transportation department? Still Buttigieg's crew. Coming down toward A, home base, B, breakup candle low, and C, a most recent breakout area. 16.8, give or take, is going to be a big area. They got to stay above the 20, above this breakup candle low. That low's a little bit lower, 746, 16,746. They have to stay above that for the bull case to continue in team transports. What about the Q people? Chart looks very similar to the SPY. This breakdown candle high here is 503.33. Closing print today, 503.46. 13 cents above that number. The spiders were 10 cents. Are there any accidents or coincidences in the market? And the short answer is, of course not. So on its face, and we take everything at face value until proven otherwise, on its face, it's bullish for now. The XLF was down 33 cents today, but they're still up here in the midst of making a bullish, flaggish, eating time off the clock-ish type of pattern situation above all the moving averages, sideways, which they are doing. Sideways is corrective in nature, giving the 20-period moving average or home base a chance to creep up to price. That's exactly what's happening at present. We're not going to read anything more into it than that at present. How about Smash Mouth? Up about $2.64 today, 1%. It's a bounce in a downtrend below 3 out of the 4 moving averages. We're going to just leave it at that. Your most recent breakdown candle high is in fact 244.57. Closing print today, 244.27, below that number. Unlike the other two indices. No material change on the chart. Now, I want to go over some of the stocks. I want to look at the longer term charts and just show you what I'm seeing. Some of them tell you something, some of them tell you nothing, but I just want to compare and contrast. We'll start with Amazon. We'll go over to a weekly chart and we say, well, this is obviously in an uptrend. We can make a case that they put in a high over here. Only because it's a red candle doesn't really mean anything. We're not really making the case. I'm just saying you can make a case because they have a little bit of a tail and it is a high. So the visual is, hey, did they put in a high? The reality is they're well above all the moving averages and it wasn't on tremendous volume. So we're not going to read too much into that. And from a monthly chart perspective, you tried to break down. They were rescued. They broke up. This is almost equidistant. It's not quite, but there's some kind of symmetry thing going on here. If they went a little bit higher, we could call this a little bit of symmetry. But what you can say is that on the monthly basis, this was eating time off the clock to break higher. Doesn't have to happen all in 1 month. And you have decreasing volume on the way up. That's been prevalent since 2000. You have the same or similar characteristic in Amazon. So we don't have the sign or signal of a top. We have an uptrend. We're going to have to be a lot lower to confirm there's some kind of failure going on here. There's nothing wrong with the Amazon chart. How about Apple? We'll go back to the weekly and we'll start there. Riding the 20-week moving average. The trend is your friend. This isn't an uptrend. You just haven't been able to bust out to new highs, but there is an important breakdown candle high here. It is the all-time high. They ran a test of it. It is a breakdown candle, and price was rejected there. So we're going to take that at face value and say, but wait, there's more. So we have a new or another breakdown candle in the sequence right here. So we say, all right, so that's a little lower than the other one. As long as they stay below the high of that breakdown candle, then we know that there's a little bit of trouble, at least in paradise, in apple paradise, or at least the apple orchard. And the flip side of that is if they get above that breakdown candle, then we're looking at another test around the or at new all-time highs. We're just using these charts as examples to give little lessons here and there. Above all the moving averages, very strong market in an uptrend. People may want to call this rounding top. It's the beginning of a rounded top. It is possible, but think again from a monthly chart perspective, well above home base. They could be going sideways, giving price a chance to creep up to home base, or another month or so, this could roll over down to home base. There's a former breakout area which they already tested and bounced off of that. So next time down, we would not, and I repeat, not with an underline, look to get a bounce at that same recent breakout area. Food for thought, write that down as a just-in-caser. Just using the charts to provide a lesson. About Mickey Soft. Mickey Soft is an interesting one. You see it in relation to the 20-period moving average and the 50-period moving average, which is the blue sloping trend line. And you can certainly make a case that she had a move down, and we've got a bearish wedge-ish situation going on. We can call this some kind of a channel. You can call it whatever you want. Doesn't make any difference. We got a bearish wedge-ish situation. So what we do know about that is if she starts to get below and stay below the 50-period moving average, the odds begin to increase that this is starting to play out to the downside. Door would start to open in the vicinity of the 100-period moving average on the weekly chart. You flip over to the monthly chart and you say, hey, guess what? That makes some sense. She may run a test of the 20-period moving average down here at 380. Where was that other place? 360. Spike through a 20-period moving average, get to 360. And right smack in the middle, a most recent breakout area is right around 366, 367. How do you like dem apples? Also, the monthly chart on Mickey Soft would give you symmetry down there if she was down there. Symmetry from the high, which is in fact the all-time high. Google's got a couple of things going on. You have a potential high and lower high situation here, yet also on the same chart, you're above all the moving averages, so the trend is your friend. And while above all the moving averages, you're not looking for the lower high to play out to the downside. It would be, quote unquote, confirmed if she failed back below at least the 20-period moving average for now. Could this just be a pullback in the vicinity of the 20-period moving average on the monthly chart? Uptrend, trend is your friend, going to make new highs yet again. Looking at this monthly chart alone, a couple of months out, that can absolutely be the case. We're the umpire calling balls and strikes. We're not saying the market will or won't roll over in December or January. What we are saying is we're looking at this particular chart and analyzing what's in front of us. You must be able to do that as an analyst. Nvidia is going to have earnings after the bell on Wednesday, I believe. So when you look at the long-term chart of Nvidia, this is either going to be up at 165, 170, or it's going to be down here flirting with the weekly 20-period moving average. That's likely to happen beginning Wednesday evening, one side or the other. Nvidia. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.